Der aaye durust aaye. That's the buzz as India's most valued conglomerate, Reliance Industries, gifts its shareholders one share of a new business, Jio Financial Services. It is the first non-oil and gas equity offering from the group since 2005, when RIL had demerged 4 entities as the family split the assets. Reliance Industries as a stock has swelled a whopping 1,600% since that point, as businesses expanded, verticals exploded, and Jio changed the game, data proving to be the new oil. With the stock near record highs, the expectation from the finance foray are also high. With licenses locked up, data in store, customers captured through verticals, the checklist is all but done. And yet, one knows very little about what is Jio Financial and what is Mukesh Ambani's lending ambition. 8 years after getting a payments bank license, big tie-ups, why is the finance foray, which is being headed by none other than KV Kamath, so eerily quiet? Is the delay deliberate, and is this the quiet before the storm? Can they dial up a Jio playbook? Or will finance be a different devil with a tougher regulator and more formidable opponents? It's July 20th from the Economic Times. I'm your host Anupriya Nair, and with me, ET's Arijit Burman and Pratik Bhakta, as we take you through Mukesh Ambani's lending ambition on the Morning Brief. So let's kickstart this with Arijit Burman. On the other side of it, Arijit, who has been tracking Reliance for many, many, many years through all of its avatars, unified, demerged, now another demerger. Arijit, it was November last year, you'd hosted the episode on the Morning Brief talking about the much-awaited Jio Financial Services. And here we are, 6-8 months down the line, having yet another episode. Nothing much has moved on what is Jio Financial, but a lot has moved on the street. But for the newcomers, lending and finance isn't a new or a recent move from the Reliance Group at all.
Anupriya, it's great to be back. And you're absolutely right. This is not something that is new. For the longest time, thanks to a family settlement or an agreement, Mukesh Ambani could not get into financial services just the way he couldn't get into telecom. But once that got out of the way, he did immediately almost made a foray into financial services, bits and spurts. First was a JV with D. Shaw, marquee name from the US. And that was to do everything from lending to broking, insurance. D. Shaw also had a hedge fund business to get into capital markets. That didn't go anywhere. Then there was a long pause, a lot of planning to add the financial layer to retail. WhatsApp, when Facebook invested in Reliance, the whole idea was to use the WhatsApp payments to reach out to merchants or kiranas on the Reliance retail platform through the WhatsApp payment, module. That also didn't go anywhere. There was a joint venture before that for payments bank with SBI. There were plans. Reliance tried to seek certain permissions from RBI to open some bank account of their own group or employees, current accounts, but that was not granted. The payments bank joint venture didn't go anywhere. Then there were a lot of speculation that, RBI would allow corporates to get into banking, full-fledged banking. Again, a red herring. Again, the RBI said, no, nothing doing. Again, a long break. But now, since last October, there is the clear, a roadmap which has evolved, a clear strategy, and with the appointment of KV Kamath, and after that, at least a senior leadership team, we can see a beginning has indeed been made.
But the beginning has been a long time coming, as you're saying, Arjit, right? I mean, they're one of the first to get into the payment space. I mean, it's been over 8 years since they've had that license. The NBFC license has been in place. KVK at the helm of it obviously made everyone believe that there would be more announcements and quick announcements. It is almost been eerily quiet up till this point of the demerger.
Yes, you're right. I mean, a lot of excitement. I mean, I was actually quite stunned to see the kind of valuations that some brokerages are ascribing to this new entity, which is getting born as people are listening to this, from anywhere from 1 lakh crore to 1.5 lakh crores, which is 12 to 16 billion dollars, 5 to 10% of Reliance's consolidated market cap. I mean, yes, Reliance loves or aspires to do things which are big, but not everything has been successful or smooth. So, therefore, a lot of it still is on paper. It still is the big idea. But, you know, there is a lot of talk, a lot of chatter, but I am yet to see execution on the ground. We have actually seen very little small attempts. I mean, you can go to a Reliance Jio, a digital store, and buy any phone using some consumer lending, which has been offered by Jio Finance for the last 1 year, but that doesn't really move the needle. Now, this is where the risky part starts. The moment you demerge, the moment you list, you're on the treadmill. You'll be judged quarter on quarter.
That's the question I think many have. And you talked about valuations in the market, ascribing valuation. I think a large part of the valuation is some of the brokerages, analysts such as Suresh Ganapathy on the Macquarie side, Jalarani's from Nuama as well, veterans of between the banking and the oil and gas space are all ascribing it based on what this new entity actually holds in the parent company, which is Reliance Industries. 6% of Reliance Industries will sit with JFSL, which is where the valuation right now is getting drawn down. But I think the basic question, Arjit, that everyone has, telecom, everybody knows what they're doing. It's in your face, it's in your homes, it's in your router, it's on the phone call, it's everywhere, it's on your TV, right? What is Jio Financial?
See, they gave an outline in last October when they first talked publicly about JFS, Jio Financial Services. Subsequently, on quarterly results, they have said they aspire to be an universal or a financial service provider, which is, they will offer everything. That's the grand plan. But clearly, the first thing that will go off the gates is, to my mind, consumer lending, unsecured lending on the consumer side, using the network effect, and merchant lending. We have some idea that the plan is to, the joint venture that exists with SBI, the JFS will actually buy SBI out of the joint venture, and that JV entity will get subsumed into this new entity, which is called JFS. But merchant lending and consumer lending are the first two pillars. And then subsequently, baby steps into the non-lending space. Again, insurance, heavily penetrated, a lot of players, long tail, AMC, again, it's a space where banks dominate. The top 5 AMC are all bank-led, and they have the distribution advantage. So I do believe, it's everyone's guessing that there will be some joint ventures or acquisitions in that area, in the non-lending space, because unlike RBI, a SEBI or an IRDA is more lenient vis-a-vis inorganic consolidation. RBI won't allow you to buy a bank. RBI most likely will not allow RIL corporate to buy also an NBFC, because NBFCs also now are under a lot of scrutiny. So yes, there will be definitely some advantages that Reliance will have from day one, which is, of course, to start off, as I said, they will have a tremendous amount of funding advantage. And once you sort out the funding aspect to a great extent, you can be a very formidable player on the asset side of the balance sheet.
They're also coming in with a silver spoon in their mouth with a AAA rating parent, which I assume, and from the conversations we've had, understand, gets carried down to the NBFC as their rating as well, because the parent is rated at AAA, which means their cost of funding compared to a lot of other NBFCs. I think there are about only 4 or 5 NBFCs, including they become the 5th AAA rated NBFC. So their cost of funding is significantly lower at this point. Arjit, one has to wonder that there's a lot of noise around the NBFC space right now. Ambanis alone are not the only one looking at that space. Piramil's, it's all in the family, one would argue, also jumped in with DHFL's buy, Magma, FinCorp, Poonawala's, Godreges have their going as well. So there's a lot of excitement. And now from what we understand, Bajaj as well, its auto arm is looking at a finance venture as well. So there is a sudden rush of corporate houses into this space. So Paytm is not going to be the only competition, or credit is not going to be the only competition, or Bajaj Finance even is not going to be the only competition Ambani faces.
No, and I will say this, that most corporates have actually failed in this treacherous path because financial services is not an easy nut to crack. A, it's regulated. B, RBI and the ecosystem has changed. There is a lot more open architecture. UPI is ubiquitous and interoperable. So therefore, the road is not easy. Other than a Chola, a Bajaj, Shriram, either you become a very niche player like Shriram, you are the master of used CV financing, very niche, right? Or like a Chola or Bajaj, niche in consumer. Very few have actually managed to crack it. M&M, L&T, for most of them, the problem has been that financial services has been a secondary business. They have been there largely to serve the needs of the core company or the core vertical. And that is where a lot of transactions got done, which otherwise wouldn't have made commercial sense if you were a standalone player. So yes, there is a lot of chatter because A, there is a space. The credit cycle is still benign. Banks, NBFCs have been growing at 20-25%. It's a natural proxy for the India growth story. So it's obvious that most people, and certainly like Reliance, which is into telecom, into retail, into other consumer-facing businesses, would want to add another layer, which is financial services. We said that they obviously want to mine that data. And this is a big cohort that they own. I mean, on last count, 440 million telecom subscribers who are waiting to leapfrog onto their 5G offerings, another 250 million feature phone users for whom they've just started the new 999 Jio Bharat phone, 230 million retail customer who have made 1 billion transaction on their sprawling shopping platform, buying everything from grocery to medicine to fashion. So there's a lot of proprietary data which is available with them. But mind you, unlike China, the moment you borrow, the data belongs to everyone. It's accessible via the credit bureau to others. So therefore, it is all depends on execution. The moat, especially in credit, is not a very sticky one. Credit has always been very, very transactional. Unlike a bank account, unlike mobile phone, there is no inertia for you to switch. Whoever gives you a better rate and hassle-free experience has better distribution, you switch. And Jio has to be cognizant of that.
Reliance may have been unduly patient with their foray into finance, but the digital lending space has been anything but patient. With the deluge of fintech lenders, products, and rush for licenses, the battleground for Reliance is well stacked with a few OGs like Bajaj Finance and even nimble newbies. Let's rope in my colleague Pratik Bhakta, who has been covering the fintech landscape very closely for nearly a decade now. Pratik, welcome. Glad to have you on your debut here on the Morning Brief.
Thank you, Anipriya. Pleasure's mine.
Pratik, let's start with what does the market really look like right now and the reason why there is such a fintech FOMO almost.
I would say it's an exciting market to be in. Obviously, a lot of the credit business is going digital. But at the same time, the fintech lending sector, while it started with a lot of promise, it has gone through its own ups and downs. And I would say this sector is itself in a kind of a flux. Two things that come right on top are things that, the digital lending guidelines, which came out somewhere around September 2022, that had a major impact on the sector. And very recently, in somewhere around June this year, the FLDG norms were released by the RBI. So FLDG would be the first loss default guarantee. So these two regulatory actions have had a deep impact on the sector itself. So while obviously there has been innovation, there has been a lot of startups raising venture money, but at the core of it, it's a very hardcore business on money. So the regulator is taking a very close look at this sector, which has also impacted the startups in this space. They are also reorienting themselves. So they are also figuring out how to strictly abide by regulatory norms and be on the right side of the law and still carry on with the business. At the same time, we've also seen the large fintechs, be it the likes of Cred, BharatPe, Jupiter. These guys have applied for their own NBFC licenses. So they want to do their own lending from their own balance sheet.
That is actually a point I want to bring up. I read the piece that you did with Tarush on this about how there's a sudden rush for NBFC. Reliance now already has an NBFC license in place. They also had a tie-up with SBI, which obviously went nowhere because they've been sitting on the sidelines for most of their businesses up to this point. But this sudden rush for NBFC licenses for the likes of Cred, the likes of BharatPe, as you're saying, one card, as you're saying, as sources have been telling you, is also looking at going in for an NBFC license as well. What is driving this rush towards lending?
Yeah, absolutely. This is a trend that's picking steam with every day, every passing day. And why? First thing, because everyone wants to be on the right side of the law now. Again, going back to the digital lending guidelines, the RBI made it quite clear that, if you are in lending, it's better that you're regulated. If you're not regulated, just be a marketplace. Don't try to play a game where you're lending from your own equity without a license. You're doing some bit of, almost you're taking over an NBFC 100% FLDG kind of an arrangement you're doing. Don't do all those things. So the larger fintechs who have the money power, they said that, okay, to be on the right side of the law, let's go for a full-fledged NBFC license. That's why that shift is happening. But at the same time, you also have to understand that as an NBFC, your cost of capital is still somewhat lower. The moment you have your own lending license, you have equity money. Then you go to the market and with your kind of, credibility, the founder can go to the market, reach out to the lenders, seek for debt. And then that comes at a better rate compared to the position when you are not an NBFC, you're doing some kind of an arrangement, a little bit of gray, I would say. So these two major factors, one is obviously to be on the right side of the law, and second is to ensure that the cost of capital is also kind of controlled. That's why I would say that there's this flurry towards this NBFC license.
Will it be safe to say that when a player like Jio steps into the market, the avenue they will start to play with or come into the market, because they might be on the sidelines now, but it's not their playbook to be on the sidelines for long once they're in a market aggressively. So NBFC would be the route, and if so, in that sense, their competition then widens to not just existing players such as Bajaj Finance or Sundaram. You're saying even the smaller guys will be sort of grasping at the root levels for this digital lending as well.
True, but we can also see collaboration. So I would like to say that the market is huge. The fact that there was an SBI didn't mean that a Kotak couldn't come up. There was an HDFC, ICICI. Still, there was a space for a Kotak or a new age lender to come up. Same for fintechs also. And I'm sure if Jio comes up in a very big way with its own financial services play, there is no reason why a fintech cannot partner with them. Obviously, Jio will eat into their pie. Fintechs are also, they're very small. So they'll still continue to exist on the sidelines. But yes, if you're saying that if there's a competition between the cream of the customer base, then obviously there is very strong competition coming from the existing lenders as well. The HDFCs of the world are pretty well digitized. They're not, they're as comparable to the user experience of a credit customer. Maybe not that great, but they're getting there. So Jio will have to also, kind of play all those games. So we will see how it works out. But as of now, I would say that there is obviously that opportunity of partnerships, which I'm sure a lot of fintechs will be open towards.
If partnerships versus acquisitions is more the Ambani playbook right now, what they've done in luxury. So I'm not...
in fact, there's an interesting point there. See, in lending, what do you acquire for? Why would you acquire a lender? You would acquire the lenders for its lending platform. Today, lending platform is not difficult to build. You can build it in-house. Would you acquire for its extremely premium customers, where it's great customers? Everyone is fighting for the same customer base. Yeah, we all know that. So even if you look at it over all these years, there has not been so much merger and acquisition, M&A activity happening in the fintech lending space. Because typically, if it's a big enough fintech, acquiring it for what value? There are a lot of questions. Can you build it in-house? Maybe yes. So maybe if Jio doesn't follow the same playbook, I will not be very surprised. Maybe they can have a different playbook here. But yes, I agree with you. Jio has done it in the past. So maybe they will do this time as well.
I want to talk about this elusive customer base. In your research, in your conversations with various fintechs, is the customer base shifting? Is it becoming younger? Is it becoming smaller ticket? What is the customer base or the product offering at this point looking like in the fintech market that is sort of the hot product or the hot audience at this point?
I would say, if you asked me this question last year, it was buy now, pay later. That was the hot product at that point in time. But even now, I would say it's consumer lending. As you would have seen, that the RBI data also shows that personal loans for the first time, even in size, it's become bigger than corporate loans. Every NBFC, every bank wants to touch retail now and make retail their cornerstone. So yes, I think younger consumers are more open to taking credit. Credit cards are being lapped up by young consumers a lot more than it used to be even a couple of years back. So I would say this, yes, consumer lending, even some form of buy now, pay later still now, I think it makes a lot of sense. And eventually credit cards. And of course, personal loans as well. But yeah, more so for the younger audience, it will be like a consumer durable loans, checkout finance. These are the most emerging spaces, and it will be the most attractive space for any new business to come in. And it's easy to crack into this space also.
Yeah, and easier for Reliance as well, given the fact that they already have a tremendous amount of data touch points with customers across the board through their retail arms.
We've also picked up some buzz here and there that they've done some bit of pilots in consumer lending and stuff like that. But if I look at it from Reliance's point of view, I think the easiest bet for them would be in the B2B space. Reliance works very close as a wholesaler, right? And they have a massive network of retailers. Why not? And that is a space that needs credit every time. I don't know. Again, this is from very personal understanding. I would believe that B2B lending is something that Reliance can surely look at.
What is the B2B fintech lending landscape like right now? Is there enough of those players, or is it very, very nascent and not as attractive right now, or not headline attractive enough?
Not headline attractive. It's we are to be blamed for not looking at the B2B space that minutely as much as we are interested in the consumer space. And same applies to founders also. Founders find it easier to get into the consumer lending space, and that has attracted a lot of venture money also. But B2B, yes, it is less disrupted. It is more traditional. The size is bigger. So, an early stage startup might find it very difficult to kind of scale up very fast. There are interesting B2B buy now, pay later players who operate in the online B2B e-commerce space, like in partnership with a Flipkart Wholesale or a Jumbo Tail and Metro Cash and Carry, stuff like that. That space is up for disruption, I'm telling you. And Reliance is very deeply entrenched in that sector already. They can work wonders there, I believe personally. I don't know what they're up to. I don't have inside information on that, but
but that's the whole thing in this podcast as well. Our biggest struggle has been to get enough views. You hear the morning brief, we want to get as many views, as many sides of the story. And that's the last point I want to come up and ask you, Prateek. Is there conversations within the fintech space about Jio at this point, or is it let the sleeping giant lie and nobody wants to jinx the fact that it's not been a disruptor? What is the mood and moat like amongst the fintech industry right now?
As I said, moat is just relationships that they have with their banks, that they have with their lenders. They're hoping that those relationships will continue to operate strong. In terms of buzz, it's there. I won't say it's not. In fact, I was just talking to someone a couple of days back when all this Jio Financial Service news was breaking out, and he said that they have a massive network, man. And that was what this founder told me. It's something to be scared of. But the thing is, we have enough on our plate already, and let's strengthen our business very well. And we cannot stop a Reliance from coming in. So there's no point in being scared. We continue doing our stuff, and then we will see what kind of challenges we face and how we can deal with those challenges. But as of now, I think the priority is to ensure that the business gets back on track. Post-COVID, the numbers are starting to look better. So get as much market as possible, get as many sticky customers as possible, get your brand out there as much as possible. So tomorrow, if a Reliance comes and kind of steamrolls them, they can at least have a defensive structure.
That tomorrow is what the market and everyone is waiting or not waiting for at this point, Prateek. Last word, have you ever
Yeah.
seen something like this where someone's had a license, multiple licenses for years and just sat on the sidelines? Is this,
Uh,
I mean, has
I
this, in your experience of reporting, have you ever seen someone, I mean, people have given licenses back. Equitas gave their license back. That happens. People go in for M&A, people get out of the business. What do you fathom? They've had these licenses for years. What is your reading of the fact that they're still on the sidelines?
I think they had their own priorities in place. They knew which one to attack first and which one to keep for the next day. Conglomerates keep licenses. If in my very limited, I'm not a corporate reporter, and in my limited understanding, what I realize is companies, if there is a license available, keep it. And that's what a lot of startups also do. And these days, who've become unicorn or who have enough money, keep a license. You never know when it comes in use. And I think it's absolutely fine if you get an opportunity, get the license. And especially in something which is not very easily available. While NBFC licenses at one point in time were given out like just were distributed, but now RBI has become extremely careful about giving out licenses. So see, that way there is one thing less to worry about. So Reliance has kept all these licenses. Its payment bank bet didn't work out. I remember in my early days of reporting when I was covering that space very, very actively, and I was very hopeful that entire market was waiting. What will happen with Reliance coming in with its payments bank? It will disrupt the banking space altogether. But then somewhere they lost interest or whatever. The entire payment bank promise went for a toss. Even when the Facebook Reliance deal happened, there was a lot of excitement in the market, and we covered it extensively how it could have an impact through WhatsApp. Small retailers will
Right.
take orders online, pay through Reliance, the
But
Jio
that's not
app.
translated either.
Nothing has
Yeah,
translated
yeah.
yet. Yes. So I would say yes, but they've kept all those licenses, they've kept those partnerships going, but we've not seen being executed as well. But see, this time if they have different plans.
Well, as the saying goes, der hai durust hai. But that's what the fintech market is right now worried about. So it's a
Yeah.
wait and watch, and I'm sure we'll hear more from you. Thank you so much for joining us here
Thank you.
on the Browing
Thank
Brief.
you.
Absolute pleasure. Last year in August, when a 65-year-old Mukesh Ambani detailed succession plan, there was no mention of the financial arm. A few months later, the demerger was placed before shareholders, which reignited the excitement for a foray that has been dormant, while telecom, retail, and even sports soared. Though many expect Ambani to make a wave in the financial space, there are those who argue aggressive pricing and unbridled freebies only work to a point in the credit corner. One would also argue that the lending landscape is very different than telecom, where Jio faced faltering and crippled opponents buried under fees and spectrum charges, and only one worthy adversary in Airtel. But in lending, the tail is long, and the banks remain the dominant force. So even as on day one, Jio Financial Services, which will have a worthy net worth and a vast existing consumer base from its retail and telecom businesses, credit may not be a cakewalk. You've been listening to Jio Financial Services. With that, it's a wrap in this episode of The Morning Brief. You've been listening to me, your host Anupriya Nair, with Arajit Burman as well as Prateek Bhakt from The Economic Times. A shout out to the team that helped put this together. Producer Suroni Jain, on sound Indranil Bhattacharjee, and executive producers myself, Arajit, and Anirban. The Morning Brief drops every Tuesday, Thursday, and Friday, and you can catch it on the podcast platform of your choice. Watch out for on Friday. My colleague Kalpana brings to you why there's fear and objections to the new forest bill. Stay tuned for that. From all of us here, thank you for listening in.